$65 billion. That is not a rounding error. That is the GDP of a small country, vaporized into thin air, inside a lipstick-shaped skyscraper on 3rd Avenue. For decades, the world believed Bernie Madoff had a secret algorithm that could predict the future. He didn't. He had a dot matrix printer, a few boxes of paper, and a terrifying understanding of human greed. Everyone thought they were investing in a complex financial engine, but they were actually feeding a furnace. This isn't just a story about fraud. It is the anatomy of a financial cult. Now, let us open the archives and step onto the 17th floor to see how the machine really worked. To understand the greatest financial illusion in history, you must first forget what you know about con artists. The cliché tells us the con man is a desperate hustler, sweaty, fast-talking, chasing you down the street with a deal that sounds too good to be true. He is the hunter, and you are the prey. Bernie Madoff flipped the board. He didn't hunt. He sat in his chair and waited. For decades, Wall Street was a noisy, chaotic bazaar where everyone was trying to sell you something. Amidst the shouting, Madoff built a sanctuary of silence. He was a titan of the industry, a former chairman of the NASDAQ Stock Exchange. He was Uncle Bernie. He didn't need your money, or at least, that was the performance. When wealthy investors, hedge funds, or charities approached him, hat in hand, begging to give him millions, his initial answer was often a polite but firm no. This was the genius of the velvet rope. Think of the most exclusive nightclub in the city. If a promoter is standing on the sidewalk dragging people inside, you assume the club is empty and desperate. But if a bouncer stands at the door, arms crossed, staring past you, suddenly getting inside becomes the most important thing in your world. Rejection breeds obsession. By turning people away, Madoff transformed a financial transaction into a status symbol. Having an account with Bernie wasn't just an investment strategy. It was membership in a secret society. It meant you were in. It meant you were safe. And because you had fought so hard to get your money in, you were never going to ask too many questions about how it was growing. You didn't ask the magician how the rabbit got into the hat. You were just grateful to be part of the show. And what a show it was. The mechanism he claimed to use was called a split-strike conversion. It sounds intimidating, a wall of jargon designed to make your eyes glaze over. Let's break it down. Imagine the stock market is a casino. Most people walk in and bet on red or black. If they win, they double their money. If they lose it all. Madoff told his clients he had found a way to rig the table. He claimed he was buying shares in the biggest companies in America, the blue chips, and then buying insurance policies on those bets, options, to protect against a crash. In theory, this strategy is like driving a car with a speed governor and a roll cage. You can't go infinitely fast, but you also can't die in a crash. You give up the chance for a massive windfall in exchange for safety. But Madoff wasn't actually driving the car. He wasn't even in the vehicle. On the 17th floor of the Lipstick Building, the trading terminals were props. The ticker screens were just lights blinking in the dark. The billions of dollars in trades he claimed to be executing They never happened. Not a single share was bought. Not a single option was sold. The strategy was a ghost story, told to accountants. Instead of a complex trading algorithm, the reality was terrifyingly physical. It was paper. While the rest of the world moved to digital records and instant transparency, Madoff's firm sent out paper statements via snail mail. They were printed on old dot matrix printers, the kind that scream when they print, leaving perforated edges on the sides. To the investors, this felt quaint. It felt bespoke, like a hand-stitched suit. It felt trustworthy because it was tangible. In reality, the paper was a shield. You cannot hack a piece of paper sitting in a drawer in Palm Beach. You cannot digitally audit a letter in a mailbox. The paper allowed Madoff to type in whatever numbers he wanted. If the market went up, Bernie's clients went up. If the market crashed, Bernie's clients went up. He had created a world without gravity. The hunger here wasn't just Madoff's greed for the fees. It was the investors' hunger for a world without risk. They handed him their fortunes, their retirements, their charities, their legacies. Not because he promised them the moon, but because he promised them that the sun would never set. He stood behind his velvet rope, checking the list, letting them in one by one, into a room that had no floor. If you had looked at a chart of the S&P 500, the pulse of the American economy, during the 1990s and early the 2000s, it would have looked like a jagged mountain range. It spiked during the dot-com boom, crashed when the bubble burst, rallied, and then stumbled again. It was volatile. It was alive. If you looked at a chart of Bernie Madoff's returns, it looked like a ruler drawn at a 4-5 degree angle. Up, always up. Month after month, year after year, the fund returned a steady, hypnotic 10% to 12%. It never had a bad month. It never had a great month. It just ticked. Like a metronome in a room full of screaming jazz musicians. To the seasoned eye, this should have been terrifying. In finance, consistency is unnatural. Markets breathe. They panic. They sleep. A pulse that never changes isn't a sign of health. It's a sign of a machine. But Madoff wasn't selling finance. He was selling sleep. To maintain this coma-like state of steady profits, Madoff needed to industrialize the lie. He couldn't do it all himself. This is where the feeder funds came in. Think of Madoff as a massive, hungry furnace in the basement of that lipstick-shaped building. The feeder funds groups, like Fairfield Greenwich, were the pipes. These were sophisticated hedge funds that did nothing but raise billions of dollars from Europe, South America, and Palm Beach, and pour it directly into the furnace. They charged their clients massive fees for management, but their only management strategy was to write a check to Bernie. They didn't ask questions, because the answers would have stopped the fees. They were the willfully blind gatekeepers, selling tickets to a sinking ship, because the buffet on the deck was world-class. Down on the 17th floor, the reality of the operation was shockingly low-tech. While the legitimate trading arm of Madoff's business on the 19th floor used cutting-edge technology, the secret hedge fund was run on an ancient IBM AS400 computer system, a relic from the 1980s. Why use a dinosaur to run a spaceship? because the dinosaur didn't talk to the outside world. The computer was programmed to do one thing: rewrite history. This was the mechanism behind the magic. Madoff and his tiny circle of uneducated, loyal staff would wait until the trading day was over. They would look at the highest highs and the lowest lows of the day's legitimate market activity, the horse race that had already finished. Then, they would enter fake trades into the computer, as if they had bought the stock at the absolute lowest price and sold it at the absolute highest. It wasn't trading. It was time travel. He was betting on yesterday's game. The computer would then churn out millions of pages of trade confirmations, those physical paper slips that were mailed out to the feeder funds. The paper was the proof. The paper said, "Look, we bought IBM at $100 and sold it at $105. The paper was a lie, but it was heavy and it had a watermark, so everyone believed it. But a Ponzi scheme is a biological entity. It has a metabolism. It must constantly eat. In a legitimate fund, if you have $100 and earn 10%, you now have $110. The money is real. It's in the account. In Madoff's world, the $110 was just a number on a screen. The actual money, the original $100, was gone. It had been used to pay off the investor who wanted to leave last week, or to pay for Madoff's yachts, or to keep the lights on in the London office. To keep the illusion alive, Madoff needed fresh victims. He needed new money entering the front door, faster than old money was leaving the back door. For decades, this wasn't a problem. People were desperate to get in. The velvet rope kept the demand high. The furnace was full.
Sanctuary.
Then came 2008. The global financial crisis wasn't just a market crash. It was a liquidity drought. The entire world suddenly needed cash. Banks stopped lending. Hedge funds stopped buying. Rich people who felt rich on paper suddenly realized they needed actual dollars to pay their mortgages, their staff, and their debts. The ATM effect kicked in. Investors looked at their portfolios. Their stocks were down 40%. Their real estate was down 30%. But look, there was good old Uncle Bernie. His fund was still up. He was the only green number on a screen full of red. So, they did the logical thing. They tried to withdraw their money. It started as a trickle. A few million here, a few million there. Madoff paid them. He had to. If he missed a single redemption, the illusion would shatter. But then the trickle became a flood. By December 2008, clients were demanding $7 billion back. Madoff looked at the bank account. The Chase 703 account, the single bucket where all the money sat. It didn't have $65 billion, as the statements claimed. It didn't have $7 billion. It had less than $300 million. The math had finally come for him. He was a man standing on the beach with a teaspoon, trying to hold back a tsunami. The unshakable line snapped. He wasn't a wizard anymore. He was just an old man in a penthouse, staring at a black hole. He had spent 40 years digging. The end didn't come with a bang. It came with a whisper in a penthouse. On the 10th of December 2008, Bernie Madoff called his sons, Mark and Andrew, into his office. The walls were closing in. The phone was ringing with redemption requests he couldn't honor. The $7 billion hole was staring him in the face. He couldn't borrow any more time. He sat them down and said the words that would vaporize $65 billion of wealth. It's all just one big lie. He didn't say fraud. He didn't say scheme. He said it was a lie. A giant Ponzi scheme. The sons, who had worked in the legitimate side of the business their entire lives, were stunned. They went straight to the authorities. The next morning, the FBI arrived at the penthouse. Madoff was in his bathrobe. He didn't fight. He didn't run. He just said, "I know what this is." When the news broke, the world gasped. It wasn't just the money. It was who lost it. It wasn't just faceless banks. It was Steven Spielberg. It was Kevin Bacon. It was Elie Wiesel's foundation, a charity dedicated to the memory of the Holocaust, wiped out by a man who was supposed to be a pillar of the Jewish community. But the true horror wasn't the celebrities. It was the retirees in Florida who had played by the rules. It was the teachers' unions. It was the people who thought they were safe because they were inside the velvet rope. Then came the second tragedy, the clawback. This is the cruelest lesson of the Madoff affair. In a Ponzi scheme, there are no real profits. If you invested $1 million in 1990 and withdrew $2 million in 2005, you felt like a genius. You spent that profit. You bought a house. You paid for a wedding. But in the eyes of the law, that extra $1 million wasn't profit. It was stolen money, taken directly from a new investor who just walked in the door. So, the court-appointed trustee, Irving Picard, had to do the unthinkable. He had to sue the winners. He had to go to people who had innocently withdrawn their money years ago and say, "Give it back." Imagine you buy a car from a dealership. You drive it for 10 years. You sell it. Then the police show up and tell you the dealership was a front for a theft ring, and you have to repay the full price of the car because it never really belonged to you. That is the radioactive half-life of a financial lie. It doesn't just destroy the future, it rewrites the past. It turns honest people into accidental accomplices. Bernie Madoff died in a prison hospital in 2021. He left behind a legacy of ruin, a son who took his own life, family destroyed, and thousands of victims who are still waiting for a check that will never make them whole. The Lipstick Building still stands on 3rd Avenue. The 17th floor has been renovated. New tenants are there now, making real trades, building real businesses. But the ghost of the empty room remains. We tell ourselves we would have spotted the con. We say we would have asked for the audits, checked the counterparties, verified the trades. But Madoff didn't trick people because they were stupid. He tricked them because they were human. He sold them the one thing the market can never truly provide: certainty. He sold them a world where the line always goes up. And we bought it. because deep down, we are all terrified of the fall. The archives are closed for now. The dust settles on the files, but the lesson remains sharp. Trust is the most valuable currency in the world, and like any currency, it can be counterfeited. Because in the ledger of history, every debt must eventually be paid.